Ladies and gentlemen, hello and welcome to Nadex. My name is Philip and I will be your presenter for today's webinar. Just as usual, if you have a look at your webinar interface, you can see that small questions box, and please by all means, if you do have any questions through the course of this webinar, just let me know and I'll do my very best to answer those questions as we move through the webinar. Right now, I would appreciate a very short yes or why in that questions box to just let me know that both the audio and the screencast are working properly. And to see the screencast in action, I'm switching the first title slide. Perfect. Thank you very much, everybody, for the feedback. Really appreciate it. I think it looks good. So yeah, we're good to roll. Today's webinar is scheduled as usual to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you are comfortable with them. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you are using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only. We will be looking at the live markets. We will be looking at, I will be telling you guys what I see on those charts. And that's the main part or the main content for today's webinar. You should be able to look inside my head and see what's going on there. Why am I looking at a chart in a certain way? What do I see on those charts? But I don't have a crystal ball, and this means I don't know what the market will be doing next. I definitely have losing trades. I have many losing trades, but with a proper trading strategy and some experience, you should be able to have more winning trades than losing trades. And those winning trades should preferably be also bigger than those losing trades that you always will have. And so it's just a game of statistics. You want to win more often and you want to win bigger. So even if I tell you now that this chart looks very bullish to me, that's just my opinion right now, and I could be wrong. Statistics from last year, I was wrong in about 35% of all cases. Guess what? In the end, at the end of the year, it was still enough to have a very decent income just from trading. So keep that in mind. It's just for educational purpose, what I'm showing you on those charts. So please make sure you're okay with this. And we also, of course, have our risk warning this time directly coming from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just jump to our content, today's agenda. I already highlighted the idea, the basic purpose of having a trading strategy in the introduction. You want to have a trading strategy because you want to be consistent with your trading. You want to be able to make that law of big numbers work for you. You want to be able to have comparable trades so that the hopefully more winners that you have than losers should be able also to pay more yield than what you lost on the losing trades. And therefore you need consistency, and the strategy is just that. The strategy is a recipe, and if you follow to that recipe again and again and again, you should be able to get consistent results. If you have a recipe for a chocolate cake and you stick to that plan and do that chocolate cake exactly like the recipe tells you to do it, it should taste very, very similar every time. And this is just the way we want to approach our trading. Yeah, let's just have a look at the markets and jump right in there. And just as always, I want to also show you guys how easy it is to place those trades here on the Nadex platform. But again, even if I place the trades, this is not a trade recommendation. It's just for the sake of demonstration. The first market that I want to show you guys today is Euro against the British pound. And yeah, let's just have a look here on the daily chart. We can see that this market has been somewhat range bound for quite some time now. The first test of this level of 0.88453 We saw that one here at the beginning of 2017, and just recently we tested this level once again and again and once more and again, and now finally we have broken out of this level. And even if we pick a level a little bit higher, we're now testing this level here and pushing beyond this level as well. So currently, definitely there is some momentum going on here in British pound or euro against the British pound. And we can also see that our moving averages here are still fanning. Let's make it a little bit larger here. You can see that just recently we had a cross back here, and yeah, now our moving averages are starting to spread out again. It was pretty close here, and we saw that as price is about to break out here, we are gaining also some more momentum. Could be a little bit more momentum here, but the overall picture here is currently rather bullish on the daily chart. Now, how could this be tradable? And if you have attended our webinars before, you will know that I always want to see the big picture. And the center stage for my trade is now here coming definitely from the daily chart. The weekly chart is giving me the broader picture about what has been going on here. So we get here some more perspective, and we can see that this area here has been cleared. And let's just drop in another level here to see if we can identify some more areas. And you see exactly here that also coming back from those levels of prices that we tested back here in the day, we're currently very close to testing those levels. And if we base it on those here, we can see the price is now pushing beyond and currently really trying to gain some momentum here, even on the weekly chart. Now, weekly chart is looking rather bullish. We see some good strong action here. Again, look at the size of the candle and compare it to the size of the previous candles that we saw here. This is really a move that is currently happening in the market. Now, weekly chart looking not too bad. Daily chart also suggesting some good momentum here to the upside. Remember, those Nadex contracts are available on different time frames, or are available for different expiry cycles. And usually there are more contracts available for shorter time frames, for shorter expiry cycles. And this is just now that I understand that we have some bullish momentum going on here in this market, that I'm now dropping here to my lower time frames. And this is exactly what I'm talking about here, for example, on the 15-minute chart. This is now a beautiful uptrend here on the 15-minute chart, but also on the higher time frames. The 8-hour chart pushing higher, 4 hours, 2 hours, breaking out of this level here, 60 minutes, and the 15-minute chart. And so the idea here is, how could this now be tradable here on the 15-minute chart, for example? But once again, I didn't jump in on the 15-minute chart. I wanted to have the idea what the market might be doing first. And this is what I'm getting from those higher time frames. They define the stage. They set the stage and give me the context that I need for potential trading strategies and setups here. What can we see here? It's an uptrend. Why is it an uptrend here on the 15-minute chart? Because price is making higher highs and is making higher lows. You see price is pushing higher and it's pulling back a little bit. Where does it pull back to? It pulls back to form a new higher low. And now we can see here another small bullish candle setting up quite close to our moving average buy zone. I would have preferred if that pullback would have been a little bit deeper and would have given us a buying opportunity here. But that's on those lower time frames. The markets are moving fast. And in the end, what we're giving you with our strategies is really just the basic plan. Once again, it's just like mom's chocolate cake. You get the recipe, but in the end, you start to modify. You start to adjust. Probably you want to put in some more whiskey, or I'm not an expert on chocolate cakes, unfortunately, but you will start to modify. One more egg, a little bit less flour, and you get my idea. And it's the same thing with those trading strategies. Our strategy, the official teachings, the official lore tells us that we want to see a pullback to our moving average buy zone, the area between the 10 and 20 period moving average. And once we get this there, and this example on top of this daily R1 pivot would have been so nice, we didn't get it. If your recipe adjustment variation tells you this is close enough, this is good enough for me and for my trades, then those are your rules, and it's perfectly fine to have those rules, but then stick with those rules. What is the plan that we're looking for here? I'm thinking we might be seeing another pullback here, probably just another push higher right now, but again, ultimately a pullback into a moving average buy zone. where price catches its breath, sets up for the next move higher. The basic idea with our strategies is that those are trend following strategies. What is in motion stays in motion. And we will continue to trade in this direction of the trend as long as this market is not showing any signs of weakness and is not suggesting that this trend is over. What would it take for this trend to be over? Price would now have to start to make new lower lows. So I'm a bit reluctant to call this here already a low. The last higher low that we saw would have been here. And so if price starts to pull back beyond what we see, let's put a level on there to make this more clear. This here would have been this area here, something like that. This would have been my recent higher low. And so if price starts to pull back beyond this level here, then the trend would be over. It's no longer an uptrend, and I would no longer be looking for buying opportunities here. But as the market is right now, you have now two possibilities. You could say, okay, I still see momentum in the market. Price could still be pushing higher, or I'm waiting for this pullback and I'm looking for a good trade location there, a good buying opportunity there. Now, let's just have a look at those Nadex contracts and see how those might be traded here with our current market situation. Now, let's have a look at euro against the British pound, and here you see those different expiry cycles. I'm looking here now at the 3 p.m. daily options, and you can see that those options still have about 2 hours and 48 minutes left in their option in their life cycle for what to do. What is a binary? Let's do a quick recap. I think you guys probably definitely know the basics, but let's just do a quick recap. What the binary contract does is we're looking at that point in time in 2 hours and 47 minutes that price might be, and let's just pick, for example, this contract here. The contract that you have here on is that at expiry, 2 hours, 47 minutes, you are expecting Euro GBP to be above 0.8920. If that's the case, exactly at expiry, if price is trading above this level, not at this level, but above this level, note it's a larger than sign, it's not larger than equals. If at that point in time, Euro British pound is trading above 89.20, this contract will settle for $100. So if I'm buying one contract here, I would be buying this contract now for $80.75. And if price pushes higher and trades up at this level, above this level, this contract will settle for $100. Now, it's very nice about the Nadex platform here. You can immediately see what is my total risk on that trade. We forget about fees and commissions now for a moment. Just what is my risk on that trade? My risk on that trade would be the now $13 that I have to pay, $14 to pay for that trade. That's my total risk. If I buy one contract, I might be losing those $14. My maximum profit, on the other hand, would be $86. Why? Because if price trades above the strike price at expiry, the contract will settle for 100. I paid 14, so my maximum profit is 86. And now we come to one important KPI when it comes to trading those binaries: reward to risk ratio. My reward would be 86 divided by 14, which is my risk. And this is a very nice, very decent number. This should be something around, let's say something around 6. Very nice. 6 to 1 on a trade, 6.5 to 1 on any trade. That's a very nice reward to risk ratio. But we have a drawback, we have a downside. And the downside is that the market currently thinks that's rather unlikely for price to move so far in such a short period of time. Remember, the clock is working against us, 2 hours and 45 minutes. And price has to push from where it's trading right now. It has to trade up to and above 89.20. And this is reflected by the price that we see here. One rule of thumb, and again, it's not precise mathematics, and statistics is always just that, statistics. But a rule of thumb is you can interpret the mid price between the bid and the offer as the probability that this trade might be trading at the strike price at expiry. And so right now, the market gives this trade about a 10% chance to be trading up there. And now you understand the probability that this might be a successful trade, a potentially successful trade, is rather small. It's just 10%. And so the market is giving you a very decent reward to risk ratio on that trade. Let's just put that trade on for the sake of completeness. And again, I do not suggest that you place that trade because, yeah, it's quite a bit. And again, it's not one of our perfect setups that we're looking for. It's now just for the sake of demonstration and completeness. Billy, thank you very much for the question considering the indicators. I will be explaining the indicators in just a moment when we're switching back to the next chart. Right now, I would just, for the sake of completeness, want to show you guys, if you think, no, we are a bit overextended now and think price might be pulling back, we might be looking also, and let's pick a different expiry cycle here. We could be switching now to the 7 p.m. expiry cycle. And you see here we have 6 hours and 43 minutes left, much more time for this trade to work out, to play out. And the idea might here be to say, okay, why not have a look at this 0.8080 strike price? And if we want to sell this contract now and sell one of those contracts, if I'm selling this contract now, the market is paying me $86.50. What is my maximum loss? Well, if the market closes above the strike price of 88.80, I have to settle this contract for $100. I just got 86.25, and for that reason, my maximum loss on that trade would be just the difference between 100 and 86.25, which is $13.75. So if I think price might be coming down to this level of 88.80, which is right here on our chart, if I think that's a likely thing, a likely case to happen, I might be inclined to sell this contract here. Now, the market gives this trade, which is now deep in the money, a probability of about, once again, the mid price, around about 91% that this trade will be in the money at expiry or at the money, 91%. Again, we want to sell this contract potentially here, and in order to turn that into a potentially winning trade, price has to drop. It has to drop significantly, and the market thinks this is rather unlikely right now. But once again, I get a very decent reward to risk ratio. I'm getting 86 if this trade turns out to be a potentially winning trade. I get to keep what I sold this contract for, and in the other case, I have to settle for 100, the difference being just 13.75. Let's just place this order here, and you see the order here is currently working, and it has been executed. Again, I neither recommend one trade or the other. This was just a demonstration to show you guys how easy it is to put on those trades. And depending on your personal assessment, what the market might be doing, how you might be trading those moves and those setups. All right. Any questions on the strikes, on the process of thinking and picking strike price and expiries? If so, just let me know. I'm now just switching back here to the next market. And yeah, Anthony, show a strategy. It's okay. Yeah, let's have a look at another market right now. One market I want to briefly cover here is gold. And gold would be sitting right here. All right, so what's going on with gold? Let's have a look at the bigger picture. And while looking at the bigger picture, let's have a look at our indicators for Billy. We're looking here at a 10-period moving average, which is always black on our charts. We have a 20-period moving average, which is always blue. We have a 50-period moving average always being red. And on the lower time frames, you also have a 200-period moving average, which is always green. That's a normal candlestick chart. Here we do have a monthly chart, which means one candle represents a time span of 1 month. And here at the bottom of our chart, we do have our momentum indicators. We do have MACD with the standard box settings of 1226, 9, and RSI being the standard settings. Once again, RSI of the close over with a factor of 14. it's being there pretty much on every charting platform that I do know. So no worries, no matter what you use, or if you're using the internal HTML-based charts here at Nadex, you can definitely set up those charts to look the way they look here. One question we always get, do I want to have simple moving averages or exponential moving averages? It doesn't matter, because we're using those moving averages differently. We are not interested in the crosses. We are not interested if price touches or moves beyond. We feel that this is those are lagging strategies. We are always late to the party. Guess what? Yeah, getting the signal to sell the market here. Don't you agree that selling the market here would have been much nicer? It's always lagging in nature. You're always late to the party. Here you get a buy signal. Guess what? That move has already been in place here for 5-6 months. Doesn't make sense for us to be chasing the market like that. We also don't use MACD in the conventional sense. I don't care about the histogram. I don't care about the 9-period moving average of MACD itself, and I don't care if RSI is overbought or oversold. What I'm using those indicators here for is I'm scanning for convergence or divergence. I want to get a second degree of information and confirmation that a trend is still going strong and still looking healthy. What we can see here right now is the market has pushed to a higher high on the monthly chart for gold. Now it has pulled back to form a new higher low compared to the low previously, but now we've seen a lower high. And now it depends on what the market might be doing next. You see those moving averages are once again very close to each other. Compare this to what we're seeing here. Here you see this fanning pattern. You see those moving averages spreading out. Just make a fist with your left hand and then spread out those fingers. This is what a fanning pattern should look like. And this is just exactly what we're seeing here. You see good separation between those moving averages. And that's the first thing. We can use this as a confirmation and agreement of how strong the trend is and has been. And you always see too, that price is pulling back here to our moving averages. And this is what we call good trade location. If price pulls back to our moving averages and gives us a small bullish candle setting up there, this might be a very nice potential trading opportunity. And Anthony, this would be, there are more factors than that. And by all means, feel free to browse and search the webinar archive here at Nadex to learn more about those strategies. But those are some core ingredients and components of the strategy that we're teaching here also at Nadex for you guys completely for free. Now, monthly chart. Pushing higher, lower high currently, somewhat no man's land. It's difficult to see what's going on there, but definitely in the last 2 months have seen some selling momentum. Now looking at the weekly chart, pretty much the same picture, and you can already start to see the price is pushing here now lower and trying to break out to the downside, and this becomes much more apparent here on the daily chart. Now, looking at the daily chart, we can see the price has now tested this level here of about the 1208, 1209. And the next big stop here definitely is 1200. Big round number, very important number from a psychological perspective and approach. And for that reason, I'm feeling quite confident. But again, I don't have that crystal ball. That's just me, and I could be completely wrong. But I think there's a lot going on in this market that a retest of the 1200 level, at least for me right now, seems to be a little bit more likely than not. And you can see we have pulled back. We got a rather bullish candle setting up here yesterday, rejecting this level. Today's candle is a little bit indecisive. Let's make it larger here. What I could be thinking of is that we want to see a pullback once again, a pullback here to a moving average sell zone, and you start to see that those moving averages already have started to fan out. Push lower, pull back, push lower, pull back, push lower. And my perfect setup would be a small pullback here into a moving average sell zone because we are in a downtrend, and then getting a small bearish candle setting up here and then pushing lower then for the next move, for the next test, probably of the 1200 level. That's something that I'm watching, or how we call it, stalking over the next few days. And this is something I might be interested to trade. Now let's have a brief look at the Nadex contracts here. And what I like to do here, if price is pushing lower and I don't know how far it can move, but I want to have some wiggle room for this trade to work out, definitely always like to look also not just at the binaries, but also at the spreads. So if we have a look at the commodity spreads, and let's pick gold here and go for this contract here. Now this contract just has 1 more hour available for in its lifetime until expiry. Remember, if you want to pick a spread, let's just assume that you wanted to trade this market to the short side. Not a trade recommendation, it's just, yeah, you know the drill. If I want to enter a spread to the short side, if I want to sell this spread, I always want to pick a spread with a range where the upper ceiling, the upper level, is as close to where I'm trading right now. And the lower ceiling, the lower the floor, the lower boundary should be as far away as possible, because then price has all the distance in the spread, in the range of that spread, to work for me, to play out for my trade. And so if I'm shooting now for a potential trading opportunity here going for 1200, we're currently trading at 1212. So this contract here trading 1170 to 1210 would be quite close right now, because here we're just trading 2 points above the upper ceiling of that range. So all the range could still be working out for me. However, how likely do I think it is that price will drop significantly below 1210 within the next 63 minutes? Not so likely. So first thing I want to have is a range that works in my favor, and the next thing that I want to see is enough time left in that option trade to be working out. Now let's have a look here at, yeah, that was that one, and you see I'm quite limited here. I don't have currently available the expiry time or lifetime of that option that I'm looking for, and I'm also not that happy here with those perfect, with the ranges being available. You have to find an investment instrument that fits your trade plan. Binaries, I'm pretty sure you can always find something which is very close to what you want to intend to trade with binaries. With spreads, you have to see what's available and if that meets your strategy and your setup. If it doesn't, no problem at all. Move on to the next market, move on or move back to binaries. Nothing wrong with that. All right, so that's the idea I have with gold. I'm waiting for the pullback and another potential push lower to test and see a test of the 1200. And for the sake of completeness, I want to have a very brief look, as time is already time's already quite up. Let's have a look at the Nasdaq. Nasdaq has been going strong here over the last few months, perfectly pushing higher after we have left this trading range. You see this area here of support resistance, test 1, test 2, 3, acting as support once again, and pushing higher. And once again, you get the big picture here. Beautiful uptrend. What do you see? You see the fanning pattern of those moving averages. What do you get? You get a pullback to a moving average buy zone. You get a small bullish candle setting up there, and then it's off to the races. Right now, we're pulling back here, back into a moving average buy zone. We're getting a rather bullish candle. It's a little bit too large for my taste. In the advanced webinars, you will learn about why small candles are important to our strategies. And today's price action doesn't look that this week's price action doesn't look that bullish at all. Now let's have a look how this looks on the daily chart. And while the weekly chart technically still is an uptrend, the trend definitely has changed to a downtrend here on the daily chart. Please have a look that this is a lower high compared to the previous one. Let me just put on, this is a lower, come on. All right, it's not working, sorry guys. This is a lower high compared to that one. And now we're pulling back once again, and we're making here currently what appears to be another next lower high. Not only lower highs, but we're seeing also lower lows here. And we see that our moving averages have now also shifted back to a downtrend. 10 below the 20, below the 50. 200, of course, takes some more time to fall into place. The overall picture here is to the downside. If the weekly chart was in agreement, this might be already setting up here as a potential entry candle for a move to the downside. Maybe we see something here on those lower time frames once again, but those are pretty much still here. Trend on the 8-hour chart pretty much has now shifted back to an uptrend. 4 hours is going sideways. So Nasdaq currently a little bit in no man's land, but the overall pressure or big picture that I'm seeing here is I'm seeing a little bit more pressure to the downside, but that might just be me. Again, if I don't get a clear picture, if I don't get a clear setup, I don't want to trade that market. I only want to take the best trades, the best opportunities, and if it's not clear what's going on in this market, move on to the next market. You have so many markets available for your trading here, many different time frames. So why trade for the sake of trading? You want to make money, and you make money only with those where you can stack the odds in your favor. I hope that makes sense. All right, guys, time is pretty much up. Remember, if you have questions, let me know, and I'll answer those questions at the end or after the official part of this webinar. And for the official part of the webinar, let's just finish this last official slide. Just a second. Yeah, all right, everybody. Officially, that's the end for today. I hope you enjoyed today's webinar and you liked what you saw, you liked what you learned, and you learned something new. And yeah, in the end, our intention is that you learn something and that you find our content useful. Please sign up for our next webinars. Have a look at the webinar archive if you want to learn more about those strategies. And just as always, there should be a short survey at the end of today's webinar, and any feedback is really, really appreciated. Again, we're running those sessions for you. We want to deliver value and give you valuable content. We want to help you to become the best traders that you can become.